Montek Singh, our Deputy Chairman of the Planning Commission, speaking on the Q4 GDP numbers.
What is your assessment on the coming quarters and months as far as growth is concerned?
Well, I mean, the CSO has simply more or less endorsed the advance estimate. So I don't think that the CSO numbers give you any additional information to either become more optimistic or less optimistic. In fact, the growth rate in the last 2 quarters is kind of 4.7 and then 4.8. I don't regard that difference to be significant. So it is challenging to try to get to something like 6% in a quarter where the last quarter is 4.8 does require a very substantial acceleration. I cannot, of course, predict how the economy will react. I mean, all one can say is, which I've been saying earlier, I think there's evidence that the economy is bottomed out.
Right.
We don't yet have evidence of a strong recovery. I'm hopeful that there will be a recovery simply because we've taken a number of actions in the last 2 or 3 months which are just about to have an impact.
Right.
Now, sorting out the fuel supply problems on coal, gas, a few other things that were stuck, actions taken by the CCI, etc. But in all probability, I mean, the impact of these actions are going to take some time before they have their full impact. So it continues to be difficult.
Capex, that cycle has totally bottomed out. Do you believe that at least on that front we would be seeing some kind of a uptake?
Well, I would certainly hope so, but the good news, as you say, is that it has bottomed out. I mean, it's not falling. It's very difficult, to predict because investors, it's well known that, investors, when they are a little bit concerned, it's not just setting the one problem right. They probably look for a whole lot of things to fall in place, and then you get a sudden change in mood. But what we need to look at is what's it going to do to actual expenditure on the ground. And there's no basis at the moment for making a prediction. All I would say is that to predict 6% growth for the current year, it's not actually impossible because, there have been situations in the past where the economy has rebounded 1.5 percentage points. But that requires, for example, a very good agricultural year. There will be a recovery from what was earlier a somewhat lower level of agricultural growth than the economy is capable of. If you get that, you get a revival of demand. I agree with you that investment revival is very important. And I think the next 2 months will be quite critical for that.
So, another good news coming in right now is on the fiscal deficit front. It's at 4.9 as against an estimate of 5.2. Do you believe that in the coming year, in FY14, we would be seeing, what is your assessment on fiscal deficit? Would we see, more of this, good news as far as...
Well, I'm not looking for a smaller fiscal deficit than what we budgeted. I mean, I think we should not, there are some things which you need to fine-tune. And continually squeezing the fiscal deficit is not necessarily the most important thing to do. What I think last year's deficit numbers should establish is the credibility that we can do 4.8 should be very, very high.
Right.
And I think that a lot of the concern, not only amongst investors but financial analysts, say 2 or 3 months ago, their concern was that they felt that we wouldn't be able to stick to the fiscal deficit target. I think they should be pretty reassured now that we can stick to the fiscal deficit target. And my view would be we should spend all the energy we can to get investment revived, whatever way there is. And there are many things that are being thought about.
What about current account deficit, which is at the moment one of the biggest headaches of the government, more than the fiscal deficit, of course. So do you believe that we need policy action on things like having more restrictions on gold imports to curb this huge problem?
No, I think there's no question that the current account deficit has been a matter of concern. It's my view that the way things are going, particularly if you accept the fact that the fiscal deficit is likely to be under control, that the current account deficit will not be as bad as it was last year. Now, I don't want to sort of speculate on what we do in this area or the other area, because the current account deficit is really the result of all kinds of factors: exports of goods and services, import prices, what happens to oil prices. Most of the signals would suggest that we will have a better current account deficit in this current year. Okay?
Sir, agriculture is one thing. What needs to be done on the government side to ensure that we come to the projected growth levels?
Well, in my view, the most important thing is that we look at the infrastructure sectors and we try to remove the domestic constraints, whether they are regulatory, whether they are environmental, whether they are fuel supply. There are a lot of problems, and I think if we can concentrate on getting those fixed, that's the quickest way of getting an investment revival.
Right.
Okay?
And how about mining, sir? It's due to...
No. I mean, all
we're doing on mining?
fixed problems.
Okay, he's saying that it's challenging to get growth back to 8%, 6% rather, but it is not impossible.